And folks, I want to welcome you to a special live broadcast here on the Crusade Radio Network and the Mike Church Show in conjunction with Miles Franklin and Andy Scheckman. Andy and I are going to talk about the state of the world, the state of the economy, what's going on with the world's largest gold purchases and why are they continuing, what's going on with the Trump economy, what impact does tariffs have. There's some other things that we'll talk about tariffs and trade and being the world's reserve currency, and just a lot of probably questions that you have. Feel free to drop them in the chat room at crusadechannel.com/chat. That's crusadechannel.com/chat. As always, you could call 844-527-8723, 844-5-CRUSADE. We're going to go live now to Andy, who is standing by. And Andy, the roar you hear in the background is not a jet airplane. 15 minutes before we were scheduled to go on, my home AC. All right, so where are we going to start here today?
Well, I don't know, man. There's a lot to talk about. We can talk about the Moody's downgrading of the credit from AAA to AA1. We can talk about the influx of metal into the Comex. We can go anywhere you want.
Well, I thought that, first of all, this portion of the program and this show is brought to you by the Win a Pound of Gold.com contest on May the 30th. That's next Friday. We're going to give away 1 pound of gold, 1 troy pound of gold, which is 12 golden eagle coins. Are those the same coins that have been in circulation since like the 20s or the 10s?
No, those are over my shoulder there.
Oh, yeah.
Those would be the double eagle. The gold American eagle is the coin that the U.S. Mint makes brand new every single year. 1 ounce of pure gold, plus 1/10 of an ounce of silver and copper alloy. The net weight of the American Eagle is 1.1 ounce. Some people, think, well, it's only 22 karat. Is it not as good as a 24 karat coin? It's a misnomer. There is 1 ounce of pure 24 karat gold in it, plus 1/10 of an ounce of alloy, which means you could play poker with it. At the end of the night, they'd look brand new. You do that with a 24 karat coin, they would look 100 years old. So to me, it's my favorite modern gold bullion item, period. It's made every year by the U.S. Mint, and it's the Cadillac of gold bullion.
And it's hard to believe, but sometime in the past, back in the day, if you were going around the Wild West, for example, you actually would have one of those coins in, and it would actually just be worth, what, $20?
That's correct. It was worth 20. Well, they made them in different denominations, 20, 10, 5, 2.5, and 1. But yes, I mean, gold was money prior to 1933. And it's interesting when you talk about, there's all sorts of talk of gold revaluation going on. And Roosevelt, over my shoulder, that's what he did. That's the executive order that he used to confiscate gold in 1933 when everyone owned it. It was currency. And he paid everyone, the coin was $20. He paid everyone $20.67. And with a dozen eggs being a nickel, that was a lot of money back then. And then he immediately devalued the dollar by 40%. That gold jumped to $35 an ounce, where it stood until 1971 when Nixon closed the gold window. Interestingly enough, the following year, Nixon devalued the dollar by 7% and revalued gold to $38. And the following year did it again from 38 to 42.22, where it stood on the books of the U.S. government since 1973 at $42.22 an ounce, well below the marked, the statutory price right now of $32.50 or whatnot. So it's a massive. It's interesting too, by the way. The name of the account that the gold is held in on the U.S. Treasury balance sheet is called the gold revaluation account. It's as if they prepare to revalue it again at some point in the future by leaving it in that account's name at $42.22 an ounce. But gold was money for a very long time, and even though history isn't repeating, it's kind of rhyming. It's coming back full circle, as it really appears on many levels, Mike, that gold is being reintegrated into the monetary system across the globe.
And just I want to talk real quick because you're an expert on this stuff on silver. I collect these guys. I got a bunch of these guys laying around. Not laying around, actually collecting in tens. This is, I don't know, it's been 10 years since I actually...
That was my end. So I can't see exactly what that is. Can you tell me what it is? I can't see it big enough.
It is a Eagle coin that says United States of America, .99999 1 ounce Troy. And on the back is this set of scales. You see that?
Yep. And so that's the silver American Eagle, my favorite coin to own in bullion silver. Also, here is a shinier proof version that I keep on my desk. But let's do it this way. That's the silver American Eagle.
That's beautiful.
And again, it's the Cadillac of silver bullion. Those are made every single year by the U.S. Mint, and from a standpoint of liquidity and demand, there's nothing quite like it. Now, going back to the older stuff, if I had a choice and if I could only own one form, the Morgan silver dollar, which was made from really the mid 1870s through 1904, and then they made it again a little bit in 1921, or the old $20 gold pieces that you mentioned, they're my favorite way of owning it. But that takes a little bit of understanding of the gold market and whatnot. For people who are looking to accumulate gold and silver bullion, the gold and silver Eagle to me is the best choice. It is the most liquid, the most sought after, the most non-subjective. It checks all the boxes. So for me, if you're gonna, it's a hell of a prize to give away 12 gold Eagles, which today are very expensive. You're talking somewhere in the neighborhood, for those people who are trying to figure out what 12 gold Eagles are really worth, somewhere in the neighborhood of probably just over $40,000. That's one hell of a prize that I hope people understand. A $50 ticket to win $40,000 prize is a asymmetrical trade that I would take anytime. I will tell you that there is no better way to own gold bullion or silver bullion. It is the most sought after form in the United States.
Here's something interesting that Andy was telling me the other day that I didn't know. Start thinking and talking about tariffs for a second here, and the fact that most of our gold bullion bars come from Switzerland. So people are either they're being tariffed or there's a fear that they're going to be tariffed. You might have seen the story the other day. Costco cut its gold window off. They're saying, like, if you're a Costco company, apparently you could go into Costco and buy 1 ounce bars of gold. Well, unless you're a super premium customer now in Costco, you can't buy them. They cut them off, so that I guess they can't get them.
Yeah, it's because the tariffs are affecting non-monetary gold, which that is a non-monetary item. Whereas the American Eagle, if you look closely on the American Eagle, it says $50. Now, there's all sorts of debates and questions as to why they would even put a face value on it. I can tell you that I've traveled with Canadian Maple Leafs, which are also $50 face value, from Montreal into the United States. At the time, gold was $1,200 an ounce. This was several years ago. And I did so with 240, I want to say, if I remember right, which is 12,000 times 50. I think that's the right number.
All right.
And after spending a good hour and 20 minutes in customs in the bowels of the Montreal airport, they came back and said, I'll be damned, you're right. It is the legal tender amount that allows you to go border to border. So even though I was coming in with 300,000 in gold, they let me enter without declaration because it was the face value was well, even though it was 12,000, the conversion rate of Canadian dollars to US dollars put it at $9,700. He says, I'll be damned, you're free to go. And he tore up the paperwork. So there is some face value merit, but in essence, a $50 gold American Eagle that has a value of $3,300 or whatnot, the face value is irrelevant, but it is legal tender made by the United States Mint. So that is a monetary form of gold that doesn't have the tariffs, but the bars would. And so it's becoming very difficult for the importers to rationalize bringing in bars at a steep premium. So yeah, it's probably why Costco is doing that. There are a certain number of them stockpiled. I'm sure Costco has, and I know the distributor they're getting them from. There is one distributor, Pamp Swiss distributor, that probably has a backlog of them. But after that, who knows what they will do, and maybe transition to another form of gold that isn't being tariffed.
Yeah, man, if you go to the Pamp Swiss, they're the ones that have that nifty little gold bar with, I don't know. Yeah. It's two-sided. It's got a print on either side. And you can get it in like a 10-gram denomination. All right, Andy, you were telling me, the right channel went out for a second. You were telling me the other day that we set some kind of a record in April, or there, in the modern era, there was a record that was set for the amount of gold that was imported into the United States. Apparently, we are not a net exporter of gold. I guess we have some, because there were gold rushes. But you were telling me that through the importing, that we imported some unholy amount, like $30 billion in gold bullion.
Yeah, and it's the amount of gold imports. Let me see if you can. I don't know. Am I able to share my screen and show you something?
Absolutely. Yeah.
So let me see if I can do this real quick. This is, you can see that right there.
Yep.
So we're not even through the month of May yet. It's a 718% increase from last year at this time, the amount of gold deliveries. And so this is just the tip of the iceberg. So since November, we have become net importers of gold, but the May gold contract has seen well over 16,000 deliveries, 16,000 contracts delivered. So what that basically means is that each contract is 100 ounces. That's 1.6 million ounces of gold that were delivered into the Comex so far in the month of May, which smashes the all-time record. That's $5.3 billion in just in gold that was delivered. At the same time, we've seen the May contract for silver also smash records. We've seen over 13,581 contracts last I checked at 5,000 ounces apiece. 13,581 times 5,000. That's 67,905,000 ounces of silver has been delivered into Comex. So you're talking extraordinarily large numbers, all-time highs in gold and silver. But since November, we have become a net importer of gold. We've always imported silver because we don't have any. We exhausted our strategic stockpile years ago. So for everything from military to producing coins to industrial, we import silver from places like Mexico and Peru and Canada and others. But gold, on the other hand, we've been an exporter of. Maybe once or twice in my 35-year career, for a few seconds, we've imported. The majority has been export. We are now huge importers of gold to the tune that is an outlier to the nth degree, where you're seeing record all-time deliveries into Comex. The March contract, I remember JP Morgan delivering $4 billion for a customer. What customer has $4 billion worth of gold to buy? This one's $5.3 billion. Who's got $5.3 billion to buy gold? And it's continuing month over month over month over month. It's an outlier. Something is happening. This whole experience is an outlier from anything I've seen in 35 years. Who's buying it? And more appropriately, what is it being used for? These are things that we don't know yet, but I guess we'll find out.
So we don't know if it's the federal government or the Treasury or the Fed or any of the big banks. Could be Elon.
No.
Maybe it's Elon. Maybe.
Yeah, I mean, I guess. And the interesting thing about it is, this is the trend that we've been seeing across the globe, where countries have been selling U.S. treasuries, where since 2014 on a net basis, there's been no central bank buying of our treasuries. Yes, there has been, but more selling than buying. And the interesting thing about it is that, as all of these countries sell U.S. treasuries, right? There has been, first of all, where's the the demand for U.S. Treasuries if all of these countries that have been being our creditors for all of these years, where's the demand? And then at the same time, they've been buying gold. It's the central banks that have been buying gold to push it up. Well, it's interesting. And again, the media that in this country does such a crap job of the mainstream legacy media of telling us what's happening. Now, most people in this country would believe that we've been in quantitative tightening. The Fed is no longer intervening in the bond market. The Fed is trying to normalize their balance sheet. But quietly last week, they bought 20 billion in 3-year bonds on Cinco de Mayo on May 5th. They bought 34.8 billion in 10-year bonds on the 6th and 7th, and 8.8 billion in 30-year bonds on the 8th. They bought $43.6 billion in U.S. Treasuries because evidently they feel that there isn't enough demand. They're trying to plug a hole to keep the bond market from blowing up. This is the same problem we're seeing all around the globe right now. In the UK, look in Japan. You hear of the Japanese carry trade where people borrow in cheap Japanese yen and then convert it to dollars and buy our treasuries and capture the spread between the two. It's free money. Well, the 20, 30, and 40-year Japanese yen bonds are going parabolic, straight up, highest rate in 25, 30 years
I saw
or
that.
more.
Yeah.
And so, it isn't just not the United States. The Fed is coming in to buy the 10-year and the 30-year, the back end of the market, which they're not really supposed to do. That's debt monetization. That's Weimar Republic. But they're doing this to keep interest rates low, to keep the bond market from blowing up. At the same time, countries like China, which have been our primary creditor, just became the 3rd largest holder of our treasuries, no longer the 2nd. They used to be the 1st. They had almost 2 trillion in treasuries, but they've been replaced by the United Kingdom as number 2, who's been buying our debt as China's been selling. It's like 2 drunk guys leaning against each other to keep each other up, says my buddy Vince Lancy. And the reason he would say that is that you have the largest debtor on the face of the planet who is selling its debt to the 2nd largest debtor. They're buying each other's debt, and they're the 2 most insolvent, broke countries on the planet, when the rest of the world is saying, you know what, we're out. And they're dumping treasuries and buying things like gold and taking delivery of it, reducing counterparty risk. That's something that we're seeing everywhere. 40 countries or more have brought their gold home from the New York Fed and the Bank of England, where they've kept it forever because these are the 2 hubs that give direct access to the Comex in New York and the London Metals Exchange in London, which are the main hubs in the West. But the real drive and demand is starting to shift eastward, like to Shanghai and to Dubai, where these markets are more a cash and carry market, where price is about what can I buy it for and possess it immediately, whereas London and the New York Exchange deal in futures. And the futures contracts are so massively rehypothecated, meaning sold over and over and over and over again. The same bar is represented in a contract a gazillion times over, that when everyone stands for delivery, like we're seeing right now, it represents an existential threat to some of the biggest banks in the world. And I'm not being over dramatic here. The London Metals Exchange, Mike, which is the preeminent delivery mechanism in the world or hub, has what's called a T+1 platform. T being the trade day +1 settlement. Your bar should be moving in your direction on the 3rd day. There's been such a massive outflow coming this way that, and remember, the London Metals Exchange, like I'll give you an example in silver, they have roughly 800 million ounces there, of which 500 million belong to the ETFs, like SLV. That leaves 300 million they call the float. Yet they're trading upwards ends of 2.9 billion ounces per day, 3.5 times annual global mine supply, 10 times the float. This is rehypothecation. This is danger. And so if everyone stands for delivery, the LBMA says, well, we're at T+8 weeks now, sorry, because we don't have enough manpower and a shortage of trucks. So you're saying the Bank of England doesn't have enough trucks in order to deliver the bars that I'm expecting in 3 days. You say it's 8 weeks. These are the signs of these deliveries across the globe beginning to break the suppression of the banks that forever have stepped on gold and silver to support the illusion of strength of bond market, strength of Western institutions, and it's deeper than that in silver, in particular the military-industrial complex, which we could talk about anytime if you'd like. But what we are seeing, in my mind, is a massive rush into physical possession for commodities that used to be trusted, being held in the Western jurisdictions that no longer really are being trusted. A system that is based on trust. Once that trust is squandered, when you come home and find your wife in bed with the pool boy, it's hard to get that trust back ever again. And that's kind of what we've done across the globe over the last several years, largely with weaponizing the treasury market.
It's an incredible story with Andy Schegman here on a very special edition of the Mike Church Show here on the Crusade Radio Network. And again, if you'd like to take physical possession of 12 troy ounces of gold, you can do so by going to winapoundofgold.com and getting yourself a $50 ticket. By the way, that makes you instantly an affiliate. So if you go to Andy and sell Andy five tickets, then you get a free one. So for every 5 tickets sold, because of your affiliate commission, you get a free one. So it's possible that you could spend $50 and wind up with somewhere around 150 tickets, because there's a maximum of 6,000 tickets. Again, winapoundofgold.com. All right, let's talk about, does the Trump administration, what role are they playing in this? Because while you were talking about this guy borrowing from that guy and the two drunk Chinese, the Chinese guy and the English guy, I'm thinking of that old Clark and Dawes bit where they go, like, okay, Roger, how much does Greece owe?
Thank you.
How much does Greece owe, Roger?
$367 billion.
Correct. And who do they owe it to?
Mostly to the other European economies.
Correct. How much does Ireland owe?
$865 billion.
Correct. And who do they owe it to?
Other European economies, mostly.
Correct. How much do Spain and Italy owe?
$1 trillion each.
Correct. Who to?
Mainly France, Britain and Germany.
Correct. And how are Germany, France and Britain going, Roger?
This has been going on. That Clark and Dawes
Correct.
bid is from
Why?
2009. So what you were talking about has been going on for a while, and that's the first thing that I thought of. These guys have been doing this. These central banks have been borrowing from each other and pretending like, oh, no, I'm going to pay you back this month. Okay, snicker. And then the next month is like, no, we're going to pay you back. And it's just one big circular thing that's going on here. But I'm wondering, the Trump administration comes in. Scott Bessent is probably the smartest, or at least the most worldly of the Treasury secretaries we've had, because he has some experience in what you do, actually, in buying and selling and actually working in the real world. Most of those other guys, Geithner and all the rest of them, they were just paper pushers. They didn't have any real skin in the game. Bessent actually had some. So I'm wondering, last time you and I talked, you talked about some plan where the Trump administration on July the 4th, 2026, would value an ounce of gold at $12,000, which would put $6 trillion plus on the federal government balance sheet. What do they have something to do with all of this importation of gold? That's the first question. And then the second question is, it appears that through the tariff system, President Trump has this vision that we can be have a net trade surplus, which hasn't happened since the 1970s, early 70s, late 60s here in the United States. In order to do that, though, you told me there's some principle that I never heard of, some formula. You can't be the world's reserve currency and have a trade surplus. Can you explain that to our listeners? Because I'd never heard that before 2 days ago.
Yeah, that's called Triffin's dilemma. Triffin's dilemma, and it's very easy to research it. You'll find quite a bit of rhetoric on. In fact, the White House has come out and talked about it in an official document. You even have, the vice president saying that the world reserve is more of a detriment, perhaps, than it is a benefit. And the theory really is that the world needs more dollars than we can ever supply just by buying stuff. So we have to export dollars. The constant demand for dollars makes our currency strong. You cannot have a weak dollar and be the world reserve currency, because the constant demand for dollars is enough. All these countries are buying dollars, selling their own currency in order to facilitate trade. That makes our currency expensive. makes their currencies weak. So what happens is it's a natural then progression that our manufacturing gets offshored to the cheap currencies where things can be made cheap with cheap labor, and our strong dollar purchases more of them. So the interesting thing about all of the rhetoric surrounding, the unfairness of the trade imbalance is, number one, Triffin's dilemma says it's impossible to have a strong currency, world reserve currency, and have a trade surplus. Over time. We will always have a trade imbalance. But let's remember what that has done for us. Having a strong dollar has enabled the world to sell us all of their finished products for our paper dollar, backed by nothing but trust, right? Which we've squandered.
Right.
It is also because they then are expected, and largely have for a very long time, taken any of these excess proceeds and invest them in U.S. treasuries, which pays a return in dollars, which drops interest rates. So if you look at what the advantage of being the world reserve currency has been, the disadvantage has been our manufacturing sucks. And we have offshored our manufacturing to cheaper parts of the world because of the strong dollar and the cost savings that these Wall Street companies would, and all the manufacturing companies would enjoy. But that has kept the goods that we buy cheap. Think of everything at Walmart that comes from China and Vietnam, who, by the way, just fully applied to the BRICS nations.
Vietnam did?
Vietnam has applied. They're the 40th country to apply to the BRICS. And they have also, that has also kept interest rates low because they reinvest in our treasuries, which drops interest rates, which has kept asset prices high. Goods cheap, asset prices high, and interest rates low. So, you can buy for all of these years when interest rates were so low that bigger house and the souped up version of the Cadillac and and would continue to move in that direction. And you can see that. What's your house worth at 3%, at 7% mortgage, or at 10%, or at 15%? As rates go higher, asset prices become lower and have to find equilibrium there. So
Makes sense.
Have to ask yourself the wisdom of what he is doing. Is there an agenda that we are not factoring into the equation? Instead of fostering the reserve currency, instead of having fiscal sanity, you talk about Doge, we're still running a $2 trillion deficit. A trillion seconds ago was 31,688 years ago. And we say to the world, if you don't do this, you're going to get paid 100% tariff. Well, that's not a tariff, that's a sanction. You are pushing these countries away from wanting to hold our currency and wanting to reinvest in our treasuries. And that's why the Fed has to come in and, don't tell anybody, buy almost 50 billion in treasuries over 3 days, because there isn't demand for them by the rest of the world, which would mean interest rates spike, asset prices collapse, Wall Street collapses, that you see mass layoffs, you see banks and insurance companies and anything that is interest rate sensitive, stocks, bonds, real estate, the banks, the insurance companies, as rates rise, it puts great strain. So the question that I would ask people to think about, and I would phrase it this way, look, I voted for Trump. I thank God he's here. I'd vote for him again. And I hope that his motivation is pure. But I think you have to ask yourself this: are we so far down the rabbit hole, Mike, that we have to reset the system? Under the previous administration, I kept saying it's too stupid to be stupid. The lawlessness, the open borders, the election interference, the two-tier justice system, the wokeness, all that crap, not to mention what we were doing around the world. But this one, instead of extending the olive branch, he's being more of with the stick than the carrot, and pushing countries into making decisions to move away from the treasury and the dollar, which would reset the system if all of a sudden rates spiked because no one wants the dollar or the treasury anymore. Everything collapses and you can find a victim. In other words, people don't understand how big the problem is, Mike. A trillion seconds ago was 31,688 years ago. And we have 200 trillion in debt, 37 on balance sheet, but Medicare, Medicaid, and Social Security alone are 170 trillion. That they're unfunded off the balance sheet. How do we ever fix that? So you can inflate, as most countries have, you can default, as many have, or you can find a villain that creates this moment that allows us to then Trump comes on and says, look, we all need to tighten our belts. This needs to happen. The world moved away from the dollar. We're going to become nationalistic. We're not going to be global anymore. We're going to bring back all of our manufacturing. We're going to exploit all of our natural resources. We're going to strengthen our borders. And we're not going to be the policeman of the world anymore. And we are going to take care of us. But in order to get there, it's just like Andy Dufresne, who had to crawl through 2 miles of crap in the Shawshank Redemption to get to the other side. So will we, because all of the offshoring of everything made goods cheap, and that's going to change. But it's put us in a compromised position of when you have to get your pharmaceuticals and your airplane parts and your military equipment and your AI microchips and all of this stuff from other countries around the world, you are in a compromised position, especially when things get tough, or God forbid in a war. So what he's doing on one end is admirable, but I'm wondering what he doing trying to get to the other side of that tube by incentivizing the world to find alternatives to the dollar and the treasury. And you can see as it is right now that something as demanded as a 10-year treasury, we have to come in and buy billions of dollars worth just to keep rates from rising, which further puts strain on all of the things I just mentioned. It's a crazy time, but I'll say this, Mike, if we haven't learned over the last 4 years to really question everything, no matter how invested we are in Mr. Trump, President Trump, or any of his policies, if we don't question everything, we've learned nothing. And that I will say, but I'm not pushing back or rooting against President Trump. I'm just wondering, are these tariffs really the best plan? Because what we would experience in that scenario is much higher price goods, much higher interest rates, much lower asset prices, and a much more, I guess you could say, subdued standard of living in that respect.
Well, there's a lot to be said about the downside and the upside of that. Basically, if you had a time machine, I call it the King Dude's Wayback Machine. You could go into the King Dude's Wayback Machine. You would go back to World War II or to the era in between the creation of the Fed and World War II, and you'd see American manufacturing king of the world all the way up until 1981. We make the world steel. It wasn't until the Chinese started figuring out how to make steel. Of course, they steal everything. Everything China does is reverse engineered. But, people may forget, and I think this is a cautionary tale that we ought to look into. People may forget what was the big scare in the 1980s. It wasn't Dolph Lundgren and the Ivan, what was his character's name in Rocky IV? What?
Ivan Drago.
Ivan Drago. Wasn't Ivan Drago? Yeah. The big scare in the 80s were the Japanese companies were coming in here and buying golf courses and record companies and manufacturing facilities and warehouses. And look what we did. Bill Clinton went, hey, y'all watch this. Pulled the rug out and gave the manufacturing to the Chinese. The Japanese have a demographic problem. I watched a couple of documentaries on this. It's one of the saddest stories that's ever going to be told. And in about 100 years, they're going to tell it about the once great island nation of Japan that once existed under a Holy Roman Emperor for over 1,000, almost 1,500 years, that the United States and the Axis powers brought to an end with the agreement at Yalta. And what was the trade-off? They got to do this, but they lost their Holy Roman Emperor, and they don't even have the energy or the desire to make the next generation now. Japan is going to crash. It's 70 years.
The bond market is crashing right in front of us right now.
Right. So my point is that the Japanese look as though they were going to take us over in the 80s and 90s. There were movies and TV shows made about it. Didn't happen here. I tend to trust the wisdom of an old Wharton School graduate that he has a plan and that it is worth the trade-off of Andy Dufresne. I can't believe you remember the guy's name. Tim Robbins in the Shawshank Redemption, crawling through the sewer thing to get to the other side, that it is worth it on the other side. I think for young people, our friend, the original Mark Z, his son's Xander. I mean, that generation of those young people, they don't have any opportunity without a return in manufacturing. I mean, they can have
I got 3 kids. My youngest just graduated high school this year, and you're right. There isn't the opportunity that that you and I had growing up, where the world was your oyster. If we don't do those kinds of things, because if you're not in AI or in certain fields that won't be destroyed by them, my son, as an example, who is now working for me, but he graduated the Ross School of Business, one of the finest in the world, and then went right out to Manhattan to work for Price Waterhouse. And if I didn't subsidize his living back then, he would have starved to death, earning 70 grand in Manhattan, living with three people in a room the size of a closet. But, even at 72,000 a year, what do you need a young punk out of college paying $72,000 a year to analyze the balance sheet of a real estate investment trust, which he was doing? You don't. AI, bang, done. And then you have a manager that oversees what AI did, and you can do that across the board. All sorts of professions are going to be disrupted, which is really very deflationary. And when you start to disrupt all of these professions, if you are a radiologist and you look at x-rays all day, what do we need to pay you $500,000 for to do that when AI can do it like that? And then you have one person to review the AI reviews. I mean, there's so many things that are happening, but if we don't have manufacturing anymore, we don't produce anything but financial assets. Yeah, I mean, it is a necessity. And that's why I say it's a noble endeavor. And so it doesn't matter how he's trying to get there. Maybe he realizes that ultimately there is only one way to get there, and it's to start over. And that starting over process is the question. How do we ever pay back, in essence, 200 trillion in debt, most of which accumulated the lowest interest rates in human history in a rising interest rate environment? These are all realities. And so you're right. I would hope that there is a plan in store for us that would give our children and grandchildren a future worth, living and being excited for. It's a very good point. I'm glad you brought it up.
Well, let's talk about this. In 2012, Professor Lawrence Kotlikoff at Boston University calculated that debt. He called it the unfunded liability. That was in 2012. Kotlikoff said it was $222 it was a nice round number. It's $222 trillion. That was Social Security, Medicare, Medicaid, and then your various federal and state employee retirement funds. Most people don't know this, Andy. You live in Florida. For a pretty fiscally sound, well-managed state right now under Governor DeSantis. But there are 30 some odd million, almost 40 million people living in California. Most people watching this or listening to us in California do not know that the CalPERS, 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 PERS, these are the two retirement systems for public service employees, are bankrupt. My friend Stephen Greenhut wrote a book about this in 2010, saying that CalPERS and CalPERS were $1 trillion upside down then. And then you have governors coming and saying, we're going to build a $300-400 billion high-speed rail system. No, you're not. They sold the bonds to fund that joker, to pay the freaking retirement funds. They stole the money, in other words. So it's not just the federal government that's in trouble. California's broke. It's bankrupt. Pennsylvania, Harrisburg, Pennsylvania, you know this, declared bankruptcy during the Obama administration. The capital of Pennsylvania had to declare bankruptcy. Illinois' retirement system is upside down and it's broke. New York's is upside down. They're all broke. They're all skating because the Federal Reserve and the federal government of the United States can keep borrowing money because we are the reserve currency. When that goes away, every single one of those dominoes will all tumble. I don't know how that shakes out. Do you?
But that's the point. That's what I'm getting at. The White House has pushed back against being the world reserve currency and cites Triffin's dilemma. You can find it on one of their official documents. Maybe the understanding is we have exploited and abused the privilege that we have had for a very long time, since the end of World War II, and we've crossed the point of no return, that there is no way to pay off the debt. 1 trillion seconds ago was 31,688 years ago. How do you ever pay that off? You don't. You inflate or you default, or option 3 that no one ever talks about, you find a villain. And those sons of bitches did it to us, so we need to come together as a country and unite and tighten our belts so that our children and grandchildren can have that future. That would be the line that you would get from President Trump. But the point of it is that you're right. It goes well beyond the federal level. It goes to the state level and to the public. The public has the lowest level of savings ever. And the highest level of indebtedness, student debt, which, by the way, is the largest asset of our bankrupt government, believe that or not.
That's incredible.
40% of the assets of the $5.7 trillion that the United States government owns. That's not the country, but the government is student debt, a credit card debt record, auto debt record defaults in auto debt, record mortgage debt. I mean, all of this debt, it goes all the way from the federal to the state to the local to the individual. And so we have, in essence, squeezed just about all of the milk we can out of the turnip. And at what point do we have to just realize that, look, if the Congressional Budget Office, Mike, says that by 2031, 100% of tax revenue goes to pay just the interest on the debt and those mandatory entitlements that you speak of that are off balance sheet, how do we ever pretend to be the world superpower with $1 trillion spending bill for military when it's all discretional, meaning we have to sell bonds to fund it? But who's buying the bonds? That's right. The Federal Reserve is coming into buying the bond. We owe $28 trillion by 2028 in 3 years. Trump brings in $5 trillion a year in tax revenue. That's $15 trillion in 3 years. Well, we're halfway there. And that doesn't take into account the $1.8 to $2.5 trillion deficits projected for the next 3 years each year. We're not even a third of the way there. We have $9 trillion in bonds coming due this year. Where does that money come from? And that doesn't take into account the money it takes to keep the game going. And when you talk about, again, and you have to look at things, again, I am a Trump supporter, big time. But you have to look at, if they're so steadfast on fixing this, then why the hell are they going $2 trillion in debt again? And why does he want to raise the stupid ass debt ceiling? Pardon my French. I know this is radio. I shouldn't do that. But why does he want to raise the debt ceiling again? Why? Because they can't fix it. We have a problem with spending. And that's what the world understands. Not only are we addicted to spending, but then we go around imposing tariffs. We're the paper tiger, right? Yes, we have the biggest military in the world, but we have to borrow money to fund it. And so there's so many things that are happening simultaneously that would say we're at the end of the rope. A new system has to emerge. And maybe that's what guys like Scott Bessent, who is a self-professed gold bug, who did say that during this administration, you would see a new Bretton Woods system, which means a new monetary system. And maybe that's why we've imported so much gold. And maybe that's why President Trump on Easter Sunday posted a tweet on Truth Social and on Twitter saying the golden rule of negotiating, he who has the gold makes the rules. Thank you. Well, where did that come from? We're now a net importer of copious amounts of gold since November, but never before. So, I mean, the little hints, the subtle hints. And then Judy Shelton, who I interviewed, who was Trump's, I'll show you her book here real quick for people.
Well, she was going to, when Jerome Powell gets fired or quits or whatever, that's who he wants to replace Jerome Powell with, is Judy Shelton.
Yes, and she was his nominee in 2016 and didn't get confirmed. But a lot of people believe she'll be it this year. And on the interview I did with her, her whole premise is to issue various duration treasuries pegged to and redeemable in gold, starting with 50-year treasuries to inspire confidence. She said, who would want to buy our treasuries? And rightfully so. And as you can see, no one is but the Federal Reserve, really. So, I mean, that's not true, but they're the buyers of last resort. There are central banks and other people buying them, but nowhere near what we need to fund these deficits. And net, no central bank new buying since 2014. So she says, let's peg it to gold and make them redeemable in gold. Well, the first thing you would have to do is bring back as much gold as possible. And remember, gold is held in what's called the gold revaluation account. It's the name of it. Could they revalue it? You mentioned earlier, James Rickard says 24,000. That would give the Treasury General account $6 trillion free and clear. Mike Maloney takes M1 and divides it into the amount of gold that we supposedly have at Fort Knox and the New York Fed and the West Point Mint and the Denver Mint that all comprise our holdings. And he comes out with $9,044. That's the way it used to be. Whatever the number is, Judy says to me, Andy, Trump told me, she said this on my interview. People can go check it out on the Miles Franklin YouTube channel. She said, Andy, he told me flat out, July 4th, 2026, he will issue gold-backed treasuries. Now, I mean, that's coming from one of the smartest human beings I've ever spoken to, who might just well be the head of the Federal Reserve in a few months, that he told her in no uncertain terms, the 250th anniversary, they would issue gold-backed treasuries. Well, would that coincide with a reset? Would that coincide with a gold revaluation? Would that coincide with, trying to stay within the same system? I'll let you all try and figure that out yourself. I would strongly suggest getting Good as Gold and reading it and listening to Judy Shelton. She's kind of making the rounds right now. She'd be a good person to have on your show, Mike. Brilliant lady. Whatever it is, gold is being, in my mind, quietly, instead of reacting to something, it's quietly being reintegrated into the financial system, into the monetary system by the biggest money in the world, not just in the United States, all around the world. It's coming full circle.
Well, look at what's happening right now. 4:06 p.m. On the East Coast right now. Trump's making an announcement. Fox News says now Trump announces Golden Dome missile shield. Not an Iron Dome, not a copper dome, not a titanium dome, not a palladium dome, not a platinum dome, a golden dome to go along with the new golden age, This is a new golden age for America. New golden age, I'm calling it. It's a new golden age. So he has the word gold in all of his nomenclature. I took I read a book just recently here, and I'll recommend it to your viewers and to mine. It's called Snow Leopard. You want to know how to make it in the modern media world, become a snow leopard. You want to become a category pirate, they call it. One of the stories that was told in there was, why did the crappy coffee that you get at Starbucks, why did it become the sensation of the United States and the world, where there's like 8,000, I forget how many, but tens of thousands of Starbucks outlets out there for what is just mediocre average coffee? And it's because they got the language part right. You don't go into Starbucks and say, I want a large coffee. You say, I want an Americano. You go in there and you say, I want a Venti. I want a Grande. They language the thing, right, to make it cool, so you're calling, I get a Grande latte. Look how cool I am. Well, I think Trump is doing that with gold. It's it's not subliminal either, Andy. He uses it every day, he says golden age. So maybe there is something to what Judy Shelton said.
Well, it would make sense to me. And the craziest one of all is he who has the gold makes the rules. Right. Calls it the golden art of negotiation. I mean, it is uncanny. And are they hints? I mean, when you look at the amount of gold that's being dragged into the United States, along with all of these comments, you have to wonder. I mean, at some point, it becomes very obvious that something bigger is happening with gold than we are all being led on to believe. That I do believe, one way or the other. So, I think, look, it's important, Mike, for me to mention that for me, the greatest gift my father and I started this company together in 1989 on a wing and a prayer. My father's middle name is Miles, and his best friend who lent us $60,000 in 1980 to start a company in a room the size of a closet before the internet, his middle name was Franklin. And my father and my parents sold their life insurance policies to start the company, and it was a kind of a swing for the fences type of deal. And he said to me, I won't let you make the same mistakes that I made as a younger man. And the only rule that I will ask of you, or I'll fire you, is you'll buy some form of gold or silver every 2 weeks and get paid, period. You're going to pay yourself first. And it was the best gift I've ever been given in my life, ever, to learn the laws of compounding working in my favor instead of against me, as everyone else does, in debt, and to pay yourself first, to speak to your 54-year-old self. Hey, man, you got 3 kids, college education, weddings in the future, grandkids, God willing, and all of these things, you better start saving. Well, I say that to you because, I hope one person would heed that advice. Start paying yourself first, period. Become regimented, not just with exercise every day, or not just with trying your best to be good at anything that takes compounding of effort, but talk about compounding of time and interest and effort for yourself in the future. But because I look at gold as wealth, I don't look at it as an investment. I look at gold and silver as wealth, that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And here we are almost 6,000 years after it was mentioned over 400 times in the Bible, and the biggest money in the world, the most well-informed, forget about the wealthiest, the most well-informed, these people at that level who are importing this kind of gold into, whether it be into China or into the United States or into Saudi Arabia or into, I don't care where the hell it's going. The people that are doing this, that are with the Bank of International Settlements, reclassifying it in a manner that puts it on par with cash, a riskless asset. They understand that something is coming, a change in the system. They don't buy this kind of stuff and go to the effort of delivering it when that's never happened before. You see, when I show you these deliveries, you need to understand it ain't never happening. Never. Maybe 1% in the 35 years I've done this, 1% of Comex contracts stood for delivery. Nothing stands for delivery. It's a paper game to offset risk, where if I have 5,000 ounces of these gold eagles in my warehouse, I will sell 5,000 on paper. So as this goes down in price, what I sold short goes up in price, and vice versa. It allows me to maintain neutrality in my inventory, market neutrality. But these people are saying, this isn't paper, we're going to stand for delivery. Thank you very much. So the contract, if I go long, someone else takes the other side, they go short. Well, all of these short contracts that were put on by the banks and whatnot, the other side is saying, we're going to stand for delivery. Thank you. And this is where it gets crazy. So these massive deliveries signal to me, because in order to do this, especially at that level, it's a high level of sophistication and a super high level of wealth. What do they know that we don't? Why are they standing for delivery? Why is it so far outside of what is normal? And you ask yourself, so to me, gold and silver are wealth. And the smartest money in the world is signaling that that's the way they look at it too. And the removal of counterparty risk by taking possession of it is another indictment to the system. So to me, when we talk about gold and silver, it is not to become wealthy, it is wealth. And that, I think, is what is happening as it's being reintegrated into the monetary system.
All right, I want to talk to Andy Schechtman for a second here about the Troy pound of gold contest we're giving away, which will come in the form of 12 1-ounce Troy Golden Eagle coins that actually I have a picture of now because Andy sent me one because he has them. I'd like to see the flip side of that coin so I can show people the flip side of it. But okay, let's talk about a problem that we had when we conceived of this contest. And there were, there it is. There were a half a dozen, there were 8 people in the foundational meetings for the winapoundofgold.com contest. No one thought it was a bad idea. Everyone thought it was genius and brilliant, and we just assumed that it would be an easy sell. Okay, so little did we know, and we did a little market research on it. So the Pew Research Center tells us that, well, don't worry about it, because 10.48% of all Americans own gold. And you're thinking that, that they've got gold versions of these little guys here. That's my silver guy, as you can see. Or they got the little gold bars from the PAM, the Swiss PAM manufacturing, or they've got the coins, your Golden Eagle coin. But as you explained to me yesterday, no, Mike, that's not what they have. What Pew Research Center asked them is if they own gold, they could include jewelry. So most Americans are counting rings, necklaces, earrings, brooches, bracelets, you name bling, basically. They're counting bling. They're not counting this. And so this is why so many people are having such a difficult time understanding, because number one, they don't have it. They've never seen it. No one's ever given them a $20 gold piece and said, hey, keep the change for the Big Mac or for the Big Mac meal. It is the American public, you must admit, the people who wanted to get us so far away from the gold standard that they could basically sell us any form of a paper currency, or maybe even a digital currency, did a pretty good job of removing all the knowledge that thousands and thousands of years of human beings had in the value of gold and silver in being legal tender or coins. So complete now that people think that you're a con artist if you try and do a contest where the prize is a pound of gold. I have
$40,000 worth of gold. I hope people understand that. And you're right. The real number for gold, and so my friend Rick Rule, who is one of the smartest guys I've ever met, I speak at his conference every year here in Boca in July, and I just did an interview with him the other day, and he reiterated again that the total exposure of gold and gold-related equities to amongst the entire financial matrix from Joe and Jane Sixpack to the Harvard Endowment Fund is less than 0.5%.
Wow.
That's gold, bullion, and gold-related equities. So you take the equities out, it's even less than that. Yeah, people own jewelry, but the very, very small percentage of people that own physical gold represent the pimple on the elephant's rear end. But I will tell you that over the last year or so, some very, very, very large purchases have happened on the retail level as well, where people who are, I guess you could say, slightly more sophisticated financially are realizing that at a certain point, return on your money is great, return of it's more important. Now, it's funny because, people look at the Treasury as being a very riskless form of return on your money. And, gold has doubled the performance of the 10-year Treasury for 25 years since 2000. It's averaged just under 10%, 9.9% per year for 25 years. It was up 40% last year, the 10-year Treasury 4%. It has no counterparty risk. The S&P 500 over that same period of time has averaged 9.6 or 7% with dividends reinvested. It's outpaced that just barely. It's the tortoise, not the hare. And you're right. It has been whitewashed from the vernacular, yet central banks every one of them continue to own it and stockpile it. So it's a system that has changed or has been morphed into this Keynesian system of debt and taxation and spending and government intervention away from the Austrian system, which is about savings, investment, and reinvestment. Gold represents the cornerstone of the Austrian system, and indebtedness and speculation more along the lines of the Keynesian system. Anyways, the bottom line is that, yeah, you're right. A country that was founded on the principles of gold and silver. In the Constitution, it says it's treasonous to issue any form of money that is not species, which would be gold or silver. And it's funny, you look at these gold certificates. These were what you could trade a $20 gold coin for back then. And underneath there, where on our bills now it says "In God We Trust," on those it says "Payable to the bearer on demand in gold coin." And so, it's a system that you didn't need to trust. We went 150 years with not one drop of inflation and the greatest prosperity the world had ever seen on a gold standard. And then the minute the Federal Reserve comes in, the dollar's lost almost all of its value. But we can even go back to 1971, my lifetime. I was born in 1970, Mike. And when Nixon closed the gold window, was at $35 an ounce, right?
Yep.
So gold just touched $3,500 2 weeks ago or 3 weeks ago for a minute. It's just a little bit off right now, just under 3,300. But think of that. 1 ounce of gold in 1971 was $35. Just touched $3,500. What does that tell you? That the dollar has lost 100% of its value against gold, 100% in the last 54 years.
That's
53
incredible.
years. And so, that is what people, now it's backed off a little bit. It's 99% of its value. So when people talk about, well, it's an asset that doesn't pay any interest. Okay, so if you put $350,000 or even $35,000 into gold back then, you would have got 1,000 ounces of gold. Well, what would that 1,000 ounces of gold be worth today? $3.5 million, not the 35,000 that you bought in 1971. So when you talk about the return, the point of it is that, and I can give you examples going all the way back. I can show you how buying a house in 1960, the average price of a house was $17,000. Gold was $35 an ounce. That's like 440 or 50 ounces of gold. Let's do the math. You take $17,000 divided by 35, that's 485 ounces of gold. So if you didn't sell your gold back then that your grandfather left you, even though it wasn't legal for Americans to own it until 74, but let's just pretend that they left it for you from 233. And those 485 ounces of gold back then would have bought you a house free and clear, $17,000 in 1960, according to the Census Bureau. But no, you don't. You just stick it under your mattress for Junior someday or your grandkids. And that's where it's sat right now for the past 64 years, earning nothing but dust. Those 485 ounces of gold today are worth
$1.552 million.
$25,000. and the average price of a house is $400,000. It buys you 4 houses. So the point is, it doesn't need to earn interest. It's through all of history, it has shown that it keeps pace with your standard of living. As the dollar declines, gold goes up. My father told me, Mike, that in 1964, when he graduated college, he just got married to my mother, and they could live together happily on his first salary of $6,000 a year and live comfortably in 1964. How is that even possible? You can't even take a vacation for that anymore. So the point is, it's not that gold keeps going higher, it's that the dollar is collapsing. It's lost 9% of its value this year alone against the Dixie, the other currencies, 35% against gold. So the point is that the dollar, which is being inflated and destroyed and mismanaged, is the crux of the problem, not the price of gold going higher in the face of anything. It's the dollar is falling in the face of gold.
Andy, I want to take you back to May of last year, and you probably know this, signed as law, gold and silver as legal tender in Louisiana, my state, where I'm in right now. Governor Jeff Landry signed a bill into law that recognizes gold and silver as legal tender in the state. Senator Mark Abraham filed Senate Bill 232. Under the new law, only gold or silver coins, specie or bullion issued by any state or the United States government as legal tender shall be recognized as legal tender in the state of Louisiana. Well, now, how is that possible if you're telling me that tax collector comes to your door and says you're going to put your house up as collateral for your property taxes, right? They never mention gold or silver. The U.S. Constitution says this: to provide for the punishment of counterfeiting the securities and current coin of the United States. It doesn't say anything about Franklin's. It says coin, counterfeiting coin. So, again, I brought this up because I think that the job has been so complete and brainwashing and removing from the American psyche the idea here that currency is anything other than paper that you can rip up, and that gold and silver, which have always had some role in every currency or in every system of exchange, even across the world, and it doesn't matter what language you speak, what hemisphere you're in, but it somehow all works out that it always comes back to silver and gold. And I think we have a president that is realizing this. We have legislatures. Louisiana isn't the only one state in just the last 5 years that has passed legal tender laws. So why are states doing that? It's a funny thing. I interviewed a state senator from Mississippi 3 years ago, and I asked him, I said, well, if you guys are getting blank checks from the federales who are pretending that they're ordering you to spend all this money on Medicare and Medicaid and these other programs, when in fact it's all voluntary, why don't you just cut the spending? You know what he told me? He goes, because we can't. They're addicted. He goes, we can't. The states are addicted. It's crack. It's opium. We can't kick the habit. And he even said, I said, well, what's the solution? He goes, well, they're going to have to kick it for us because we don't have the ability to do it. I think, Andy and I have been talking for about a little over an hour here now. Final thread of conversation, because you mentioned it. What would the military-industrial complex do if you had to buy your munitions in a currency that was backed in actual gold? You know, the old slogan of beating plowshares into swords, or beating swords into plowshares, right, which would apply. You wouldn't have the ability, if you had to actually trade silver and gold for weapons and munitions. I don't know that you'd have the ability to have the kind of military profligate spending in the military-industrial complex that we have today. I think it would kill it.
Well, the reason I bring it up, and by the way, there are 11 states who have passed those laws and many more who have it in front Florida is one of them that just passed it. And so, yeah, it is becoming more of a mainstream deal where states are allowing their citizens to get out of the way of the brain dead monetary and fiscal irresponsibility of this country. I'm going to share my screen with you and show you. I'll explain in a nutshell why silver has been, in my mind, so frustrating. This is a presentation that I did, and I'll do it in the slideshow version. This is, can you see that?
I can, yes.
Okay.
Smoking gun.
This is why I believe silver has been held back by the military-industrial complex. And we'll start. This was Senate Subcommittee S.2768. Granted, it was 1942. But the point is that the Silver Institute used to publish numbers for military uses. You'll see as I go along. There's about 4 slides here. The present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it's only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces a year. I was giving a speech, Mike, in Vancouver 3 years ago. I say there's 500 ounces in the tip of a typical cruise missile. And a man comes up to me after. He says, Andy, I work for the Department of Defense. I almost passed out. I'm like, oh, crap. I say something I wasn't supposed to. He says, no, it's okay. I'm a consultant, but I helped design the Tomahawk. He says, I know there's some silver in it, but I think you might be wrong on the number. I'll get back to you. Never hear from him again. He comes back 2 years ago. There he is. I go to the J. Martin's conference, the Vancouver Resource Investment Conference every year. There he was. You remember me? Yeah. He's showing me a stack of pictures that he has that he says these are all declassified. I can show you this, but I developed the Tomahawk. I was one of the main guys on it, and I'll be damned, you're right. There's about 13 to 14 kilograms in the tip of every Tomahawk cruise missile. And he says in all of the cruise missiles, you will find roughly 500 ounces of silver. And when you go into high-tech aerospace and whatnot, it's needed copiously. So if we move on, here are last year's numbers for supply demand, and look under the demand. Now we have last year a 260 million ounce shortfall in silver, minus 265.3. And if you look at the demand, industrial, total, electrical and electronics, of which photovoltaics, that's solar panels. So it's 9%, 9%, 20%, brazing alloys and solders, 3%, other industrial, 9%, photography, -3%, jewelry, 4%, silverware, 7%. Where the hell is military? It's not on there. And yet we still have a 265 million ounce shortfall between supply and demand. Well, this is what happens, right? This is how it happens. Now, what those lines represent, the red line are the largest 4 short positions on Comex. They're all commercial banks. The green line are the 4 in the red plus 4 others. They're the 8 largest short positions on Comex. You notice anything unusual there? It's a tiny little market, that is silver, and it is the largest concentrated short position of any commodity traded on Comex. Look at crude oil, in which they made -40 a barrel during COVID. It's way down at the other end of the spectrum. Hardly any shorting. This has the largest concentrated short position of any commodity traded on Comex, held by 8 Western banks. And this is what happens when you mess with this kind of stuff. This is the LBMA. Look at their stockpile. It went from way up there to way down there. And of those 800,000 ounces, there's only 300,000 or less that are available. The rest belongs to ETFs and other holders. In other words, what I'm getting at is that the military-industrial complex has been holding back the price of silver to make high-tech weapons for a very long time. And if you look at it in the lens of BlackRock is the primary custodian, along with JP Morgan, of SLV, the world's largest silver trust on the planet, amongst others. So, and GLD, the 4th or 5th largest gold hoard on the planet. And so they're the ones who suppress the price of silver in order to make the high-tech weapons. They own all of the military contractors. BlackRock does, all of the big ones. They're the major shareholders outright, basically own them. So they create the weapons. They sell them all around the world. They let countries like, the Ukraine get destroyed. And then who comes in and cleans up and gets all of the reconstruction contracts? So it's BlackRock. So my point to you is simply this. It's a lot deeper, because the question I would ask is not there is a short position, but why the hell would 8 Western banks control the largest concentrated short position in the history of the Comex market. And look on the LBMA, the oldest market in the world in London, where they have 300 million ounce float, yet they trade 290 million ounces a day, the entire float. But those numbers, according to the LBMA, are 10 times understated. They're understated because they only post the final settlement numbers, which means they're trading 2.9 billion ounces of silver per day, or 3.5 times annual global mine supply, or 10 times the float. They're doing it to suppress the price of silver in order to allow the West to make high-tech weapons without being crowded out of their trade. Now, the rest of the world has finally caught on to this. China is the second largest producer in the world, and they're flying all around the world buying unrefined doré bars and concentrate, which is a sludge byproduct from all of the miners directly in South America, and disintermediating the record keeping and the price, and they send it right back to China. They pay double what the West will, and they refine it there themselves, coming from the second largest producer on the planet. Russia now adds it to their strategic stockpile, the only government I've ever seen admit that. And you have India, who's bought almost 900 million ounces in the past 4 to 5 years from the Western sources. These countries understand what we're doing, and they're motivated, they're coordinated, they're sophisticated, and they're wealthy. Where no one ever stood for delivery, it is now the Achilles heel, or the existential threat to these stupid banks who have been able to, with money, these are naked contracts. There's no silver behind these. It's just money, where a commercial bank can just keep dropping and selling and selling and selling and selling paper to drive down the price, to create margin calls on those that go long, and they back out. They say, we're out, we're done. And then those contracts expire worthless. They buy back their short positions with no loss, and everyone wins, including the military industrial complex of the West, who has the strongest militaries on the planet, because they've been able to make these high-tech weapons, which need copious amounts of silver, without the rest of the world figuring it out. But they do understand it now. And this is a game that will not end well for banks or large short positions on Comex or the LBMA. That is what it's all about. And in my opinion, why silver hasn't performed the way that gold has, because their vested interest is in keeping it low. But now those vested interests have expanded from the West to the East and the global South. And that's when the game changes. And I think we're in the midst of that right now.
I never heard that story. I never heard any of that before. So could you make a business out of going into Ukraine and finding out where the Tomahawks blew up, confiscating all the dirt and filtering it out like you're a gold miner, like you're paying for silver?
I doubt that. And that's the interesting thing about silver, Mike, is that all of the silver used over the last 80 years in industry. Think about when you were a kid, the first handheld video game you played, the black and white TV you played, the big calculators you had when you were, in seventh grade,
yep.
the refrigerator, anything that conducts electricity has a little bit of silver in it, just about anything. In the motherboard, or the simple light switch. There's copper too, but all of that silver that's been used in electronics and in electrical appliances and whatnot over the years is in landfills, gone. And it's a depleting asset. Whereas just about all the gold since Genesis that's been mined, it's still here in the form of jewelry or bars. And you can pull gold out from the bottom of the sea 300 years after a ship sank, and it's as good as new. So, what gold has been lost in that respect, if it's ever found, it's as good as new. But when you talk about silver, its industrial applications are such that it's gone, and landfills are blown up in bombs or whatnot. So it's an asset that is depleting, so much so that the United States Geological Survey Society, it's a branch of the government,
right.
Maybe just off on the name, they said they would expect it to be amongst the first elements struck from the periodic table of elements, that being silver. As crazy as that sounds, it used to come out of the ground for 5,000 years at a ratio of 16 ounces of silver to 1 ounce of gold. It's now 7 to 1, meaning it's depleting. It's becoming harder and harder and harder and harder to find. In fact, of all the silver mined last year, about 850 million ounces, under 20% came from companies that actually mine silver. The rest came from recycling a little bit, or other companies mining other metals like copper or steel, or not steel, tin, lead, gold, and they stumble across silver. So it's a depleting asset, one that I believe has the lowest downside and the highest upside of any asset on the planet, because of all of this suppression and manipulation.
Well, let me tell you something. I used to work in my associate's degree is in commercial art. I have an associate's degree. I've been a commercial artist my entire life. I've been an artist my entire life. One of the things I learned when in Votech and commercial art school is we used to use, before there were desktop publishing with computers, you had to do everything by hand. You had to draw it out, and then you would bring it in front of these ginormous cameras. I'm talking the size of this room, with diaphragms on them. They can telescope out 20 feet so that you can take an image of anything, no matter how small it is or how large it is, from a business card to a billboard sign, and then you process it on a slide, and you get either a positive or a negative image, depending on what your printing application is. Well, then you run this the celluloid, you run it through this gizmo that processes it. Guess what the byproduct is? Silver. There's a catch bin at the bottom of each one of those processors, and a guy used to come around. If you had a camera, if you had a printing, they called it a press-ready camera. If you had a press-ready camera, you'd be on a schedule. Dude would show up, and he would take your canister, he'd weigh it, and he'd go, hunkle, do the Three Stooges, and go, and then he'd tell you, hey man, I owe you $385. He'd write you a check, and boom, he's gone. So, so silver used to be recycled, is the point.
Right. That's right. And, you know, that there is some recycling in those numbers. So, but, you know, it's certainly, things are done digitally now. So that's why under photography, it was a negative print in the supply demand numbers. But you're right. And it just goes to show that if you take photography out of it, where you could recycle it, much of silver's applications, they just end up being gone. And because if you have I don't know, I'm just going to throw out a number like 1/8 of an ounce of silver in an iPhone, does it make sense to smash the phone and pull it out of the motherboard? Maybe. I mean, at $30, call it even $40 an ounce. That's $5 worth of silver. Is it worth it? No, probably not. If it was 1/8 of an ounce of gold, sure, it would be. But so much because of its inelastic qualities, where you just need a little bit to make a larger product. Doesn't matter what the price is for the manufacturer, but it also makes it uneconomical to recycle it at the same time. So much is just gone forever and won't come back. Things like that guy was doing, you don't really see that. Only maybe maybe if they even still use it in X-ray machines. But everything has become so much more digital that it's now moved to other areas where it's needed, in like photovoltaics, which is solar panels, or other areas in this digital electronic world we live in. But military being a big one. But
if you had silver coins that were of a value, let's just say this was the $5 silver round or whatever it is, $10. You wouldn't need to recycle it, because you wouldn't want it to, until it wore out. You wouldn't want to take it out of circulation. And when you did, you would go to the mint would melt it down and just restamp it in another form here. It's actually a sad story to hear that silver is becoming so devalued in our throwaway society that it's not even appreciated anymore. And it's actually something that people are throwing away into landfills. I mean, who knew? I'm just blown away by this. All right, Andy and I have had a long conversation. At the end of this, you should all be, number one, you should be preparing for a future where gold plays a part. Number two, that means you should go get a ticket to win my pound of gold. But if you at winapoundofgold.com, go today. But if you're seeing this in June and the contest is already over, and then you need to call that guy right there. You send an email to info@milesfranklinco.com, and they'll send you the price sheet for what gold is per that day. Or smaller denominations other than the Golden Eagles, you can still get them, right? You can still buy 10 grand.
Yeah, I mean, and by the way, the price list that they will get, or any questions that they heard here or have on IRAs or anything, it's worth your time to say Mike Church sent me in the info. I mean, in the subject line to info Miles Franklin. You just get the price list. We don't publish it. We have some prices on our website. These prices that you will get on this list will be as good or better than anywhere in North America. Along with any questions, no obligation for doing so. But yes, the American Eagle, as an example, comes in 1 ounce, 1/2 ounce, 1/4 ounce, 1/10 ounce. The Maple Leaf, the same, all the way down to 1/20th of an ounce. And you can buy 1 gram bars and that kind of stuff as well. But yes, the gold comes in various sizes from 1 gram all the way up to, you could get into bigger bars. I don't recommend going bigger than 1 ounce with gold. I think it's penny wise and pound foolish. But yes, anything that people want, we have all of it in stock, and our prices will be as good or better than anyone in America. But send us an email, info@milesfranklin. Saw you on the Mike Church show. And it's simple to do. We want to give back to Mike. So any business that we do, a little bit of that will go back to the show and to his efforts. And there aren't many people out there doing something like this and, waking people up to what's going on. You are the media, Mike, far more than the legacy mainstream that hasn't done much of anything but create divisiveness over the last several years. Certainly hasn't taught us to the virtues or the importance of not only paying yourself first, but doing so in a form that has continued to appreciate, and the biggest money in the world finds it important enough to see it being imported at levels no one has ever seen in this country since World War II, when everyone sent us their gold as part of the Bretton Woods Agreement. So whatever it is, big things are on the horizon, and we'd love to help your listeners any way we can. You have my word on that. We've done this for 35 years with not one customer complaint and $12 billion in sales. I promise you, none of the listeners of the Mike Church Show will be the first to complain. I'll make damn sure of that.
Well, thank you very much. And look, I was sold on gold many years ago. Here in New Orleans, there's a company called Blanchard and Company. You probably know them.
Yep.
And I knew one of the guys that worked for Blanchard when I first started in radio in 1992. I did live ads for Blanchard and Company. So I've been a gold bug ever since 1992. I didn't know much about it before 1992. I also interviewed Congressman and presidential candidate Ron Paul over 24 times, some of them in person, live on videotape. And Ron was always, he was an Austrian. Ron was always clear, if he were elected president, in the Fed. I mean, he ran on the platform in the Fed. What's the reason that you went to a primary to go vote for Congressman? Audit the Fed so you can end the Fed. And one of the reasons is to restore gold and silver as the currency of the United States. So I do think it's important. So, folks, crusadechannel.com is our website. We're here every weekday morning, 6 to 9 a.m. And Andy's is going to post this on his Miles Franklin YouTube channel, so you can watch it there as well. He's a guest on this show, and maybe I guess I'm a guest on your show now. So we're trading the big media around. But seriously, take your future seriously. And even if you don't go to winapoundofgold.com and register, you should look into gold and silver, especially gold, as an investment. Andy,
for a $50 shot in the dark for $40,000 return, those are the kind of odds that if you're going to gamble, those are the kind of odds that I think are smart. And so yeah, I appreciate it, Mike. You're a great guy, and you're smart, you're well-read, and you're certainly articulate. I thank you for letting me be part of this and for coming on with you today.
All right, thank you very much. Folks, we're going to send you back to the studio for regular scheduled programming here, and I will see you tomorrow morning at 6 a.m. on the Mike Church on the Crusade Radio Network. See you then, and as always is the case, God bless you and Mary keep you. We'll see you tomorrow.